Welcome to the Honest Money Show. Thanks to our sponsor Bitteroo for making today's episode possible, Australia's biggest Bitcoin-only exchange. Hi, Peter. I feel like you're a man who needs no introduction. Welcome to Honest Money.
It's a pleasure to be with you, Anja. Thanks for having me.
Yeah. I wanted to start with a little bit about your clients. So you are a partner at the Bitcoin Advisor. You co-founded that with Anja, I believe. And I've also read somewhere that you manage over $1 billion worth of clients' assets. That's a lot of money.
Yep.
A lot of trust placed in you guys. And one of the things that I most love about what you've explained in other podcasts is the concept of a triple point asset. And even just yesterday, I saw someone comment on Bayani's post on LinkedIn that Bitcoin is not a store of value, it is not a medium of exchange, and it's not a unit of account. So how would you explain that to your clients?
That's a beautiful framing for that. And I think the beauty about the world we live in is that everything is subjective. To that person making that comment, Bitcoin is none of those things. But to you and I, Bitcoin represents a store of value, medium of exchange, and unit of account. And I think the very unique thing that Bitcoin represents to us, that it takes a lot of work to understand Bitcoin in this fashion, but once you see it, you can't unsee it, is that Bitcoin is what I call the first triple point asset, meaning it is the best store of value, it's the best medium of exchange, and it's the best unit of account. Now, these things typically take time to evolve and develop and for the world to reach consensus on each of those three things. But objectively, Bitcoin is a better store of value than gold, and gold's been used for 5,000 years or more to determine a store of value. Medium exchange is the world's run by the US dollar, but you can suffer sanctions, you can have your cash at bank removed from you. If you're Russia, you can have $500 billion worth of foreign reserves stolen from you. Now, I'm not saying this to be political, I'm just telling you that these are the objective facts of the matter. But none of that can happen when you own and control your own Bitcoin. And that is a very unique selling point to Bitcoin versus our traditional medium exchange in the US dollar. And the final boss of all of this is the unit of account. And there are Bitcoiners who have reached what I call terminal Bitcoin, meaning they can't get any more Bitcoin. They've sold their house, they've sold their business, they've sold all their other assets. They're literally sitting on a pile of Bitcoin. It's all in Bitcoin. And there's nothing further they can do. And those people are basically running on a Bitcoin standard, or Bitcoin represents their unit of account. So they reconcile to Bitcoin with every transaction. And if their Bitcoin stack's not increasing, it's decreasing. And they're probably wondering, how do I slow the bleed on that? And this is where what is very unique about Bitcoin with being a triple point asset is, for the first time in history, we've got one asset that can rule the three functions of money. And therein lies the absolute special thing that is Bitcoin. And because it's the first time in history that we've had one asset to rule them all when it comes to the functions of money, a lot of people will dismiss it. So there's an instant dismissal of store of value because it's highly volatile. Well, that's in their view and their world, that it's highly volatile. But if you've been in Bitcoin 5 or 10 years, then the volatility of Bitcoin is something to be glamorized, not shunned, because that's how you get the huge returns that you do. When it comes to medium exchange, I think a lot of people are wanting to push the medium exchange narrative with Bitcoin immediately, but I can tell you from someone whose job is to preserve wealth, the last thing you want to be spending is your best performing asset. So I look at that and think the medium exchange function of money right now is somewhat of it's a dichotomy for me, because at the one time I want it to be globally universal in acceptance as a medium exchange, but at the same time, it's hard to sell your best asset to buy a cup of coffee. I look at that and think that's the internal problems that you have until you reach terminal Bitcoin, where you don't have any fiat to sell to buy Bitcoin. Then you don't really have that problem. You always have cash available to buy. But in a Bitcoinized world, then people will suffer that problem. And then the final one is this unit of account. How are you accounting for your wins and losses in the financial year? Do you look at it in terms of fiat dollars that it's gone up X amount, or do you denominate in Bitcoin where, you either have more Bitcoin or less Bitcoin than you had a year ago? And this is where I think everyone will move to the latter option, where financial success is determined by how much Bitcoin you either gained or lost in that financial year.
Yeah, absolutely. And I completely can relate to that friction between using it as a store of value and medium of exchange, because I do like to spend my Bitcoin symbolically here and there to support other Bitcoiners. And recently I lost a bet, and I calculated that T-shirt, which was like $50 now, is going to cost like just under $2,000 in 20 years.
Yeah.
It's like the most expensive T-shirt I have ever spent money on. But yeah, I would love to know what strategies you use to speak to your clients about the volatility. How do you manage their emotions and the perceptions that they have of Bitcoin? Because obviously you're fighting against mainstream media and all the FUD that's out there. So how do you deal with that?
I think I come from a very privileged position that because we deal with all types of assets. A lot of clients give me a lot of grace when it comes to introducing new concepts to them. And this was never more so than nearly 10 years ago when we talked about Bitcoin. The initial framing of that was framed around the weighting to the portfolio, and then the expected return and the expected catastrophic losses, and triangulating that into an argument that clients understood, which went very simply: the recommendation is to put 1% to 2% of your net assets into this investment. There is a 25 to 50% chance that it is a catastrophic loss and you're going to lose everything. In portfolio terms, that represents a bad day in the stock market. It wouldn't even represent a bad day these days because the volatility's gotten much higher in the stock market. It's really a bad morning. But the potential gain on this is, you're going to sit on a potential 100x in the next 10 years. And what's transpired over those just over 9 years that we've been giving that advice is we've seen clients have nearly a 200x return on that 2% of their initial investment. So obviously it's grown into an outsized portion of their portfolio. And then the next conversation that we have with clients is who see that huge gain, and now represents more than 50% of the net assets, is the conversation around clients wanting to sell some of that. And it's like, hang on a second. We're now at a different stage of this investment cycle for Bitcoin. And my expectation is there's a 100x return in the next 10 years. Do we really want to be selling this asset when property looks very soft, commodities, well, take your pick there. There's probably going to be some form of inflation there, but you look at the stock market, it looks way overpriced. Property looks overpriced. Bonds are uninvestable. Do we really want to be selling down our best performing asset to jump into these other options? And I'm more successful than not in talking clients out of selling their Bitcoin to pursue those other things, because the other options out there at the moment just aren't really that palatable or offer a good outlook for the next 10 years.
Yeah. And yeah, that makes sense. And I'm glad that they are taking your advice, because it sounds really scary to hear that someone's, has this asset that's outperforming and then they want to trade it for something else. Yeah. But what do you believe, Peter? Like, what do you think is the market size for Bitcoin? Are you thinking like 500 trillion that it could potentially reach, or what are your personal opinions?
Substantially more than that.
Really?
I think we're going to be 10 to 20 quadrillion dollars worth of market cap. And so everyone I talk to looks at that and says, but there's only $1 quadrillion worth of value in the world. How could it be bigger than all that's there now? And it's like, well, it's going to grow the pie dramatically. All of the asset values are going to get inflated to infinity. And Bitcoin's going to take up a larger and larger market share of that, to the point where it's over 50%. I actually think it'll end up being probably more like 90% of total assets will be held in Bitcoin, because Bitcoin offers the greatest functionality, the greatest return. the greatest security and peace of mind in holding that asset. It also gives you the greatest optionality. And once people understand all of those points around Bitcoin being the greatest asset ever invented, more and more people will migrate more and more of their assets to it. And I look at, you look through most of the Bitcoiners who have been around a long time, they're sitting on 90% plus in Bitcoin. And I look at that and I think, well, that effectively means in that client's world, basically it's Bitcoin is 10x all the other assets. And given that we're 10 years ahead of most advisors, why wouldn't the rest of the world catch up to that point where 90% of their assets are held in Bitcoin and only 10% is held in real world assets? That makes perfect sense to me. So that puts the market cap of Bitcoin potentiality at $10 quadrillion, and we're currently at 2. What's that? Maybe a 5,000x return from here?
But like zeros. I'm not a numbers person, so I'm going to have to visualize this after them.
Basically, there's a lot of return left in front of us. So if you're selling now because you think the party's over, or most importantly, if you think I'm not going to buy Bitcoin because I'm too late, you're thinking about it the wrong way. There's more gains in front of us than behind us. So jump on board.
Yeah, absolutely. And I'm always interested in, so what I'm hearing you, it's not a matter of if. I am curious to know when and how you think this might happen globally and in Australia. Like, what are some of the trends that you're seeing this cycle from your clients? Are people like getting it, or?
I think the biggest thing I'm seeing, which I didn't think we'd have it. Well, I'm surprised it's taken this long, but now that it's here, I'm surprised it's actually happening, where we're having conversations with clients. A lot of our clients are baby boomers. They're sitting on considerable assets, and we're having conversations going through their balance sheet to determine what are the best assets to be selling to trade into Bitcoin. And these are multi-million dollar properties, multi-million dollar share portfolios, and they're looking at this thinking, no, we think this has run its course. We need exposure in this new asset class, and we think this is the future. And if you ask me, would baby boomers be seeking out our services to have those conversations without me having to explain to them what the benefits are? I didn't see that coming. So that, I think, is a growing weight of capital that is going to force a huge amount of capital into the Bitcoin sector. And this is where these clients are typically buy and hold clients. They don't make huge changes to their portfolio. They make huge investment decisions very carefully, very methodically over a very small, maybe over decades. Do they do changes like this? And this is a significant tree change, what we're seeing.
Yeah, absolutely. And do you believe that Bitcoin will be an S-curve of adoption, or do you think it's going to be more linear?
I think we're definitely in an S-curve. I don't think it's linear. No. I think, and this is the madness of crowds, I think is probably a great book to read on this. And nothing creates a mania better than money and people getting rich. People do stupid things to get rich, and they take risks that they shouldn't. And this is the ironic thing about Bitcoin, is that you can actually de-risk your life dramatically, have huge exposure to Bitcoin, and what most people look at as wildly risky is actually very, very safe and secure. And that's the one thing that most normies have trouble wrapping their head around. They think Bitcoin's wildly risky. And I just want to caveat that by saying Bitcoin's wildly volatile, but the solution to volatility is just holding it for a long period of time. And if you do that, you get rewarded with the best returns on it out of any asset.
Yeah. Yeah, absolutely. I definitely, I keep saying this in almost every episode. To me, Bitcoin is the safest asset. There's nothing out there that I feel more secure holding. And yeah, but yeah, do you see it making inroads as like the preferred collateral for banks and money market players?
I've got no doubt. I've got absolutely no doubt. I think Wall Street's starting to understand it, because one thing Wall Street loves is volatility, and Bitcoin's the most volatile asset out there. Obviously, there's more volatile assets in the treasury companies, but that's really a leverage play on the volatile asset. So the one thing that I love about Bitcoin, and this is where, whether or not Wall Street likes it or not, the government will mandate it. I'm absolutely certain of this, the problem that we've had with Wall Street up until Bitcoin's arrival, and an institutional level anyway, is that you could not divorce Wall Street speculation from Main Street consequence. So Wall Street was taking huge bets with other people's money, and Main Street was picking up the bill for it. When it all fucked up and went to shit, pardon those words, Main Street had to pay for it, and the governments oversaw it, and there was nothing they could do about it. They just had to pass the bill on and say, sorry, you guys are good for it. Now, technically, little man didn't pay for it, but the collective did, because it got kicked up to the sovereign level. And all of a sudden, the government's now basically paying the bill for these Wall Street execs speculating. The beauty of Bitcoin is that there's no Main Street consequence for Wall Street speculation. And what does that mean? Well, if the Wall Street buyers, sellers, traders, whatever it is, if they blow themselves up using Bitcoin, there's no Main Street consequence. There's no housing bubble that's going to burst. There's no cost of living crisis that's going to get exacerbated. There's no commodities that are going to blow up and all of a sudden make bananas $10 a kilo. We don't have the Main Street consequence. And this, to me, is the really exciting thing, is that it allows Wall Street to speculate in a bubble without affecting real-world assets. And I've got a lot of my father's mates who love telling me that you can't live in a Bitcoin. And for that reason precisely is the reason why Wall Street is going to speculate on it. For the very reason Wall Street can't, that we can't live in it, is the very reason that they're going to gamble their lives on it, because there's no Main Street consequence for it. And if you sort of flow this back to the original, the genesis point of this was really in the 1980s when Larry Fink, ironically, who created the Bitcoin ETF, back in the 1980s, he wanted to monetize basically the American property market. And how did he do that? He created residential and commercial-backed mortgage securities. And that was a way to monetize and gamble on the American housing market or real estate market. Property was nowhere. It wasn't financialized in any way, shape or form. It took him nearly 25, 30 years to get to the point that created the GFC. Ironically, the genesis point of the GFC started with Larry Fink creating those options. Now, he in no way, shape or form wanted to create the housing market that went and caused the GFC back in 2008, but that were the unintended consequences of Wall Street speculation with Main Street consequence. Now, fast forward to where we are now. Larry Fink, who knows a thing or two about tokenizing things, has created the world's first, largest and biggest ETF in the BlackRock ETF. And he is going to find a way to monetize that and allow Wall Street speculation. And the beauty of this is that it removes the Main Street consequence, where housing prices go up, interest rates get smashed around, housing becomes unaffordable. All of a sudden, people are using housing as a store of value. All of those things get demonetized and sucked out of that whole ecosphere of that financial asset class and gets put into Bitcoin. And that's a net benefit for all of us.
Yeah. I hadn't thought about it, like no consequences other than maybe someone on, LinkedIn saying, I told you it was a scam once the bubble, once we have a drawback. But yeah, I've loved Larry's journey with Bitcoin. Obviously, he was very against it, and now he seems to be very, very for it. And seeing those results of the Bitcoin ETF launch is it's just wild. And I'm surprised that this isn't talked about more in mainstream media. Like, how is something like this still, you need to be in the know to notice these things. It's even in his 2025 letter to shareholders and investors, he's talking Bitcoin, potentially replacing the USD as the global reserve asset. And the media is crickets about it. It's wild. Like, what do you think will be some of the things that might slow down adoption for Bitcoin?
Well, very good question. I think if we continue to have the Operation Choke Point 2.0, the difficulty in actually sending money to the exchanges, I think that's going to slow down adoption. I think if we have a major blow up in one of the major exchanges, that will obviously rock the confidence in that. It will slow adoption, but it won't actually undermine the protocol. There's a whole host of things that I think we can see. Obviously, probably one of the biggest things is if if the government starts ramping up interest rates to where they probably should be, if we had a major increase in interest rates, we had government cap spending and actually live within their means, we reverted to a gold standard or equivalent. These things, I'm basically describing a unicorn that will never exist, but
can't see it happening.
No, it's not going to happen anytime soon. And contrary to that, we'll probably see governments really start ripping into the printer and exercising that ability to print money in the very near term. So a lot of people are calling for it. There's the expectation that that will happen, and that will have a positive effect on the price of Bitcoin when we have the confluence of rates dropping and the prices, the money printer go burr. That will obviously be very beneficial for Bitcoin. So price appreciation there will be extraordinary, I'd expect.
Yeah. I'm very eagerly to see what's going to happen now in September. Do you have an opinion as to whether the Fed will hold or lower rates, or what do you think they're going to do?
Good question. There's huge pressure on Powell to drop them, but I think he's doing a dance with Trump at the moment, and I wouldn't be surprised if he didn't drop rates at all and just said, no, we're going to sit on it for another little bit and just sort of build that pressure in the market. So I'm a bit ambivalent, and it's above my pay grade to really comment on that, but speculating on it, looking at the posturing on both sides, reading the people, I'd say we're going to have a Mexican standoff here. Rates will go nowhere.
Yeah, it definitely feels like it's very political more than anything. So, no matter what the outcome is, I probably won't be surprised. But yeah, so do you have a timeline? Like, how do you see Bitcoin recollateralizing the financial system?
Oh, yes, I think it will absolutely recollateralize or refinancialize an underfunded system. I think it's going to take 10 to 15 years to do that. And I think the fastest way to do that is with principal protected notes, where you staple government treasuries to Bitcoin and you guarantee the capital of those investments, but you take a portion of that principal protected note and you buy direct Bitcoin with it and you staple it together. Now, on a 5-year note, on the numbers that I've looked at, if you were to put in, say, $1 billion into a principal protected note, 800 million of that went into a government treasury paying 5%, so that the interest accumulated to the original capital that you put in, that's where you get the capital protection from. And that allowed you to then put 20% of that capital into Bitcoin. By my calculations, you will get a 200% return on Bitcoin and 100% return of your initial capital. So you've effectively tripled the equity of your initial investment. And all of a sudden that gets capitalized into Bitcoin. So I look at that and think that is the fastest, easiest way to do that with the least consequences. And this is the problem that really, I don't think a lot of the economists have really looked at. The way to solve these problems is to inflate our way out of it with the lowest consequences, the greatest bang for your buck, and most importantly, the best outcomes from a society. Well, I look at this and think the best bang for your buck, the best return on that, the best multiplier that you're going to get is putting that cash into the smallest market possible and the most tightly held, and that happens to be Bitcoin. The beauty of that is that there's no downstream consequences for increased cost of housing. Pumping money into the housing market or lowering interest rates is going to force up the cost of housing. It's going to force up cost of living. Everything's going to get more expensive and the inflation rate's going to go through the roof. But if you pump it into Bitcoin, there are none of those downstream negative consequences, and you actually solve what you really need to solve for, which is the recapitalizing of the financial markets.
And yeah, I'm very curious. I am going a little bit down a speculative route here, but I'm curious to know what types of jurisdictions do you think will lead the way with global adoption?
I think the strongest. At the moment, we've had the weakest governments around the world or economies around the world have adopted it. Like El Salvador is now a beacon of light in the Bitcoin community, but when they first started that, it was hell on earth, quite literally. One of the highest murder rates on earth. The president of El Salvador now Bukele's just done an incredible job turning that country around to now being a beacon of hope, symbol for the world. I think we now have in the current US administration, the most powerful administration or government on earth, and acceptance and I wouldn't say dependence yet, but there will become a dependence on Bitcoin. And we're starting to see the regulatory frameworks build out around that. And one of the things that I think is absolutely huge that's sort of gone by the wayside in just a hose full of good news is this repeal of SAB 121, which now allows the banks to custody Bitcoin on their balance sheet without it being economically unviable. So there's no reserve capital that needs to be held when you hold Bitcoin on the balance sheet. The repeal of SAB 121 removed that need for additional capital to be held. So now they can economically hold clients' Bitcoin on their balance sheet. And that is the first step of mainstreaming this into clients globally. The US is basically the tip of the spear. Everything is now downstream of that. The US is given a go ahead to make that happen. We're going to see savings and loan products now build out on the back of it. And you're going to have every bank in the world clamoring to custody your Bitcoin.
Which makes me curious as well as to how that's going to trickle down into Australia, because I always wonder what's going to be that catalyst that starts setting things off. It's still very, very much a niche thing here. And I wonder if it's going to be the institutions that are going to lead the adoption in Australia, or whether the retail sector is going to wake up. What do you think is going to happen with Australia?
Good question. I think the superannuation industry is going to start allocating more heavily to Bitcoin. And everyone who works in Australia has a superannuation account or a pension account, and that will probably be the Trojan horse for the Australians, because this will not only help to our banks don't need recapitalising. They're very strong on a global scale relative to everyone else, but our banks are they're outweighed relative to residential property. So all our banks do now is basically lend to residential property. There's no business lending of any note in Australia. It's a very difficult market to get that done in. And I think the repeal of SAB 121 in the US is actually going to have downstream consequences to us here that hopefully removes the Operation Choke Point 2.0, shows the banks how to monetize this, and most importantly, gets Bitcoin in the hands of every Australian.
Start saving in Bitcoin with Bitaroo, Australia's biggest Bitcoin-only exchange. Bitaroo offers easy tools and advanced features. Join thousands of happy users making their first Bitcoin purchase today. Download the app or visit bitaroo.com.au.
Yeah, and the whole Operation 2.0, I always wonder if there is something similar in Australia like that we don't know of. It would certainly make sense because it feels like there is, but it hasn't really come to light yet. It just seems that it is driven largely by consumer protection, but I do wonder if there is something bigger at play, and why there is, so much stalling of allowing people to transfer their funds into Bitcoin.
I'm not sure, but let me tell you a comical story, which literally happened just in the past 2 weeks. We had a client of ours. He had sold down 7 figures in Bitcoin to do something. And so there was a sale on an exchange that was passed through to a business banking account. That business banking account then went to go and buy something else. And then there was a flow of money back the other way of just on 5 figures. So less than $30,000. Millions went one way from the exchange to the bank and out. And then there was about $30,000 or $40,000 flowing from the bank back to the exchange to do whatever needed doing there. And the bank put a kibosh the transaction and stopped it and said, no, you're not allowed to do it. He's like, what? Oh, we're worried about, fraudulent behavior and the rest of it. He said, just have a look at the transaction history on this account. There's been millions one way, and now I'm sending $40,000 back this way. Please. And so anyway, hours on the phone with the bank. Lucky they had a banker that they could actually speak to, and problem solved. But there is a very real problem with sending money from your bank account to the exchange. That's probably one of the biggest hurdles that we have to overcome in trying to get clients Bitcoin.
Yeah, it's really frustrating because family and friends that want to move their money, and they're obviously law-abiding citizens. They've had bank accounts for decades with no suspicious behavior, and then all of a sudden they want to put some money into Bitcoin, and it just seems to be like the biggest problem. And it's very frustrating for sure. I hope it changes sooner rather than later. But I want to go back to the Bitcoin Advisor a little bit and more about your clients. So you guys recently have launched a specialized product called Loan My Coins, and maybe you can walk us through how that product works and who is it for?
It's a very unique product, and I'll just put this caveat in front up front that it's probably not for 99% of the people listening. So it's a very unique product that works by basically it's a Bitcoin to Bitcoin loan rather than a Bitcoin to fiat loan. And the beauty of this is that it enables us to achieve some very unique things in the Bitcoin lending space. And I'll just quickly rattle those off. The first is there's no counterparty risk. So when borrowing on your Bitcoin, probably one of the biggest concerns is having counterparty risk, whether or not you'll actually get the return of your Bitcoin. With this, there's no need to worry about it. The second point is that there's no margin call on this product. So because it's Bitcoin to Bitcoin, if Bitcoin drops 50% with every other loan out there, you would face a margin call, and you'd either have to pay the loan out or alternatively top up the cap of the Bitcoin to avoid that margin call. With this product, there's no margin call. So you're not subject to the whims and the volatility of Bitcoin, which is a huge bonus because of Bitcoin's volatility, it can whip people out of and lose their collateral that they put up as security. And this is one thing that I was acutely aware that I didn't want to do. The third point is because it's Bitcoin to Bitcoin, we can borrow effectively 95% on our Bitcoin stack. So if you put in 2 Bitcoin, you can borrow 1.9 Bitcoin. Relative to any other lender that's borrowing Bitcoin to fiat, the maximum lend you can get there is maybe somewhere between 50 to maybe, if you're lucky, 60%. But with this, you can actually borrow up to 95% on your Bitcoin, which represents a huge difference. Most importantly, if you're putting in Bitcoin as collateral for a loan, what this means is that you can either get double the amount back in a loan, or alternatively, you can have half the amount of collateral put up at risk. And that to me represents a huge de-risking of borrowing on your Bitcoin, because ultimately you want to put up as little capital as possible to get the maximum loan amount. And this is the problem with the Bitcoin to fiat loans, is that you have wildly volatile collateral that you can get a margin call on and that you have counterparty risk. And so outside of the first 48 hours of the loan contract where you've got your Bitcoin sitting in escrow, there's no counterparty risk because you've effectively got back what you put in. And we've spent a lot of time and money on legal to ensure that the contract is structured in a way that there's no counterclaim from a third-party creditor down the line. And that's really important because, so the problem that happened with your BlockFi and your Celsius in years gone by is that Bitcoiners put up their Bitcoin as collateral. So you had $1 million loan, you'd have to put up $2 million of Bitcoin, and that got you $1 million loan. And what most people did is they went and bought Bitcoin, and then to avoid the fear of a margin call, they took that $1 million in Bitcoin that they'd just bought, and they added that to the collateral of the security that the lender was holding. Now, the lender, being Celsius or BlockFi, went bust. Their debt obligations or their assets got sold off to third-party creditors. You, as the Bitcoiner who put your Bitcoin up as collateral, they lost your Bitcoin, and then they sold off the obligation that you had to them to a third-party creditor. So now you've got to deal with a third-party creditor who wants their $1 million back, despite the fact that they've lost $3 million of your Bitcoin. To me, one of the first rules of any advice that we deliver to, whether it's wealthy families or our Bitcoiners, it's not about return on capital, it's return of capital. And so these legal structures that we put in place protect you in the event that the lender goes broke. And that's really important. there's going to be no counterclaim for the Bitcoins that you receive. And that is really, really important. So what I think is really unique is we've created a loan product that is very unique. And when you first hear about it, you're like, oh, that doesn't make any sense. And then you start thinking about it from a Bitcoiner's perspective, denominating in Bitcoin, and you think, oh, okay, I understand this. I think this makes sense. And where I will say, what I think the ideal use case for this loan product is, if you can find an investment that outperforms Bitcoin plus 5% is the hurdle rate for whether or not you'd want to use this product. Having said that, it's also a very dangerous product if you think, oh, great, 5% interest rate with a 95% loan, I'm going to go and buy a car or a sauna or a whatever you want to do with your money. That's going to be the most expensive loan you're ever going to take out, and you're going to lose net on your Bitcoin. And so this is where I think Andy and I do a really good job of understanding what the clients are wanting to do with that in order to determine whether or not it's a great fit for them. Because I can tell you we've probably told more than half of the people inquiring, probably more like 80%, that what they're inquiring for, it's not a good use case. And the fundamental premise of the Bitcoin Advisor is to help get Bitcoins off exchange and help clients get more Bitcoin. And so we want to use that loan product in a way to get more Bitcoin, not to help clients lose it. And so we've been I think we've been really good at explaining to clients the downside of using such a product, because with any financial decision, there is risk, and helping explain to clients what are the pros and cons of pursuing a product like this. Yeah,
absolutely. And does timing the Bitcoin price also play into that? Like, for example, if a client was to take this loan at the top of the market and then Bitcoin's going down in price, would that be potentially the ideal timing?
Yes, it would. If you want to short Bitcoin, so if you think, if we went to $1 million tomorrow and you think this is not sustainable, we think it's going to be coming back down to 200,000, that might be an ideal time to actually take a loan out on your Bitcoin and basically convert it to cash, watch the price absolutely plummet, and then you can buy in back at 200,000 and you've effectively bought 4 more Bitcoin, or 4 times more Bitcoin than you originally had. So that would be the ideal outcome. Having said that, you'd have to be very brave, very clever, and that's not something that's in my wheelhouse. I would never attempt that. I'm not smart enough to do that.
I love it. When I was trying to research this product, I was also kind of asking all sorts of weird questions. I was on Grok. And I'm very curious to know, Peter, is this product available only in Australia, or is it available worldwide? Can anyone globally? So I'm glad you said that, because I wondered if one of your clients might potentially be Michael Saylor. And then one of the rabbit holes that I went down, I was like, would this be insider trading? And turns out it wouldn't, but he would have to obviously prove and demonstrate that he didn't use any insider knowledge to potentially leverage this product. But this is what I do in my spare time.
That's a great question. I'm glad you brought that up, because I think this loan product has got a lot of use cases. For me, there are probably 2 major use cases. The first is, I think, people who think that they can outperform Bitcoin by investing in the treasury companies. I think there is an opportunity, a small window of opportunity with a huge amount of risk, but there is an opportunity there. And then the other is, if we have a really strong bull market and it's clear that there's just a whole host of, air in the market that really needs a big drop, then it's probably an ideal product to do that, because you get to go to cash. It's very little to go to cash from an expense perspective. And then you get to, if it drops 80%, you can buy back 4 times the amount of Bitcoin that you initially sold. So I look at that and think, if you can do that, fantastic. And if you can't, then stay humble and stack sats and just get as much Bitcoin as you can. And that's the ultimate strategy.
Yeah, absolutely. And I'm still in that camp where I'm like, I'm in accumulation zone right now. I'm very interested in Bitcoin collateralized loans, but I want to spend a good amount of time learning about it before I do anything. But I think I also saw in one of your posts as well that this is the ideal product for someone who's got Bitcoin with a low cost base as well. Can you explain that a little bit more?
Yeah, I think clients with a low cost base, and let me explain, say, a use case of that is we come across a whole host of clients who are maybe OG Bitcoiners, have been around for a long time. They've got really low cost base. But the catch with that is having a low cost base Bitcoin is not only they have a low cost base, but they also have the Bitcoin in the wrong entity. So in Australia, you can have family trusts, companies, or superannuation funds. In America, you can have irrevocable trusts or offshore trusts. In the UK, there's something similar again. So each different jurisdiction has its equivalent or equivalency of that. And early Bitcoiners got Bitcoin at a very early price, but they weren't thinking that this was going to go to $1 million a coin, and they were going to sit there worth tens, if not hundreds or millions of billions of dollars. And it's sitting in a structure that is both ineffective from a tax perspective, and it doesn't provide the asset protection that's needed. All of a sudden, this loan product allows people to shift that asset into another entity, into another type structure. And this is where my background in estate planning and structuring trusts and the like for clients is really valuable, because we can effectively shift the value of these assets to another entity without a major tax consequence. And most importantly, though, about the tax consequence, you're not avoiding it, you're deferring the tax payable on it. It's always payable. And to do anything other than that is illegal. We're not trying to do that in any way, shape or form. But coupled with the opportunity in, say, the Bitcoin Treasury Company or companies, you can take a very small portion of your stack. And if you time it right, you can actually double the size of your stack. So you have a stack that's sitting in the structures that give you the best and most tax effective use of your Bitcoin, as well as an asset protected Bitcoin. And then you've got your original stack as well. So I look at this and think, this is a very unique product that has the ability to help a lot of OG Bitcoiners shift those assets into the right structures without a major consequence.
Yeah, interesting. That's very interesting. But you also mentioned estate planning, and I wanted to touch on this as well. It's one of the key things that you do with your clients. I'm keen to know a little bit, like high level, what are some of the strategies and how do those conversations typically go? Because I feel that a lot of people don't think about some of those more morbid topics, but they're so important.
Yeah, I agree. Look, no one likes talking about death, and there's nothing fun about it whatsoever. It's usually a very awkward conversation. And the difficulty is with Bitcoin anyway, is that Bitcoin is a digital bearer instrument, and there's no, in the event that something goes wrong or you don't securely transfer your Bitcoin on your death, there's no appeal to authority. There's no legal decree. There's no government mandate that you can wangle your way back to get those Bitcoins. Once they are lost for good. There's no way to recover them. And this is where, as an investment advisor who has a fiduciary duty to their client, the number one thing that we do is obviously protect their Bitcoin, but make sure that Bitcoin is recoverable in the event of death or any other mishap. And that's how we've developed that collaborative security model, to ensure that there's no single point of failure. Because the last thing I want to do is be on the hook for a client who's self-custodying their Bitcoin, and they turn around and say, "Oh, well, you told me how to do it, but you didn't tell me X, Y, or Z. I'm going to sue you." And that's an unacceptable on two parts. Firstly, the client losing Bitcoin, and secondly, being held responsible for it wasn't an acceptable business model that we want to do. Hence the reason why we did the collaborative security, to ensure no single point of failure. And I'm really proud to say that we've never lost a Bitcoin. Sadly, we lost our fourth client, sadly passed away, who's going through this process, and hopefully I'll catch up with their family next week. And just the most delightful family you can imagine. But we're going through the process of transferring that to the executor of the estate, and then distributing that to all the beneficiaries, all the family members involved. We've done that 3 times previously. We haven't lost a single Satoshi, and we're about to do that for the 4th time. And this is where, when constructing those models for Bitcoiners, we're all about not your keys, not your coins. And a lot of us fail to think about us actually being the single point of failure in our self-custody setup. And that's a very difficult thing to look in the mirror and think, have I solved that problem? That if I'm no longer here, can my family recover that? When you've got tens of thousands or hundreds of thousands of dollars in Bitcoin, hey, no biggie, you've lost it, too bad, move on. But when your entire family's net wealth is in Bitcoin, or alternatively it makes up more than 50% of your net assets, making sure that you've got a proven system and you can demonstrably prove, you don't have to trust, you can actually verify that the system you've got works, and this is what we show clients when we go through it, then that is for the clients who are not native Bitcoiners, that is a huge unlock for them, because once they see that their partner's not going to lose their Bitcoin and the person receiving it doesn't have to learn about Bitcoin, which is usually the big prohibition to getting more Bitcoin, then that's a huge mental unlock to help the family get more Bitcoin, because the non-Bitcoiner in the family is no longer responsible for the recovery of it. The Bitcoiner in the family has outsourced their responsibility to us. We show the family that, hey, this is how you're going to recover it. And then once they know they can recover it and they can't lose it, then there's the implicit endorsement from the rest of the family for the Bitcoiner to go and buy more Bitcoin. And at the end of the day, our job is just to help clients get more Bitcoin. And this is a service that helps them do that.
Yeah. I fully agree that the biggest risk in Bitcoin is the self-custody aspect. Most people will think it's volatility, but if you're a Bitcoiner, you think self-custody is the one thing you need to get right. And even though I'm a Bitcoiner and I self-custody, it does stress me out so much. It stresses me out more than anything. Every time the price, there's a 10K candle going up, I was like, oh, is it still there? And I'm checking, it's still there. So yeah, I think collaborative custody is a really interesting model. And do you think this is kind of where the future is going to be in Bitcoin, more businesses doing this sort of stuff?
I think without a shadow of a doubt, because it's a technology that it's the only asset class that lends itself to being able to do this. And I can tell you from a whole range of different reasons, this multi-sig collaborative security model is an absolute game changer. From an asset protection perspective, I think it's wildly beneficial. One of, Bitcoin's huge concerns is another 6102 style attack where the government comes in and just takes your Bitcoin. One of the beautiful things about what we do at the Bitcoin Advisor is we've got clients all over the globe. We've got, when clients work with us, we typically have a key set up where our keys are in 3 different jurisdictions. And so to actually suffer a 6102 style attack where the government comes and takes your Bitcoin, the client's not capable of moving the Bitcoin if the government came and said that, because there's keys in different jurisdictions that protect the client from being able to move it. So I look at this and think, yeah, this is one of the
very strong selling point.
Well, this is, yeah, it is. It's often overlooked and people don't comprehend it, but where I get to have some really great sort of intellectual conversations is I often get asked to sit and present to tax or legal communities, tax professionals and legal professionals on Bitcoin. And this is one of the points I love bringing up, because no other asset can you hold a key in 3 different jurisdictions. So if you think about it, commercial property is held in the jurisdiction that the property resides in. The stocks are held in, on a national level at the National Stock Exchange. Commodities, the same thing. There's actually a physical commodity that's held there, or there's a note according to that certificate. Bonds, same thing, held in the National Bank or the central bank. However, Bitcoin is the only asset on earth that can be held in 5 different places at once. That's a huge protection when it comes to asset protection.
Yeah, this is what I love about it. Learning about Bitcoin, it's just the hardest. Well, it's not the hardest thing to explain, but it does really take time to get your head around it. And that no matter how much time you spend in it and all these different aspects of it that you learn to admire, there's still something else that just makes you think, like, even that alone is such a strong point, like such a strong argument for Bitcoin. But then there's like 100 other things that are just amazing about it. This is what I really love. I'm obsessed.
Me too.
Yeah, I can't wait to see Australians really start to understand this product more. I've seen, especially this cycle, it seems like the retail isn't quite there fully from what I've heard. I haven't been through many cycles like some other Bitcoiners have, but it's what I hear from them that, retail hasn't really woken up. But there is the odd person that's like a normie and they come to the point where I understand Bitcoin and then they're selling their property for it, because that's like the moment has clicked, or they're moving in a significant amount of their net worth into it. And I can't wait to see, more Australians do that and preserve their wealth.
I think it's not just Australians, it's everyone in the globe.
Yeah.
I think all of a sudden we're going to see a demonetizing of all those other assets. Like, some of those stocks are just insane. We've got stocks trading. There's a whole host of stocks trading at a greater than 20 times PE, price earnings ratio. That means you're going to take 20 years to get the cash flow from that company to pay you back. That is a huge risk. And if you look at a comparative PE ratio to Bitcoin, you get paid back in less than 2 years on average. I look at this and think, in these terms, Bitcoin just represents such great value from an economic perspective, from a financial perspective, from an estate planning perspective, from an asset protection perspective. I look at this and think, once the world understands what are the values and benefits of this asset, then to have 95% of your net assets in Bitcoin makes perfect sense to me.
Yeah, absolutely. And earlier on, you mentioned irrevocable trusts, which reminded me of Mark Moss. And that was one of the events last year when I was a complete noob that I saw you at. And I remember you asking him a question about the trusts. But yeah, he's really interesting. I learned a lot from him. He mentioned something recently on LinkedIn that, S&P 500 is just a proxy for inflation. And I used to love the S&P 500. That was like my favorite, investment vehicle. And now it's just following inflation. It's not really outperforming it. And then you look at gold sensitivity and Bitcoin sensitivity to inflation, and you're like, this is clearly the fastest horse in the race. Yeah, definitely a long-term asset. I'm also curious to know, like, what is your average client? Who's would it be a boomer? Would it be a female?
Very good question on that. Depends how you break that down. I think most of our clients, probably our ideal client, would be someone who wants to allocate in a big way, but doesn't have the necessary skills or confidence to do that. Now, that might be male or female. Typically, that does break down into an older demographic because they're not technologically savvy like youngsters. But it typically comes down to someone who wants to be handheld through a process to ensure that they're not going to muck it up. And this is where the key thing with Bitcoin, and this is, say, on a meta level, this is a return to consequences for actions when it comes to Bitcoin. Being a digital bearer instrument, if you muck it up, there's nothing you can do to fix it. Absolutely nothing. And this is where I think our service is really valuable, because when you're working with a team of professionals who haven't lost a single Bitcoin, that helps give clients the confidence to know that they can apply as much capital as they want to this asset and they know they're not going to lose it. Yes, there's a fee for it, but it allows them to get allocated in the volume that they want. Whereas if they went and did it themselves, they might only invest 10 or 20% of what they would if they actually employed us to help them with it. And that to me is a huge benefit, because it gets them allocated in size immediately, rather than having to go through a 3 or 4 or 5 or a 6 year learning curve to feel comfortable to fully self-custody their Bitcoin.
Yeah. I've been through a year-long learning curve and I'm still not fully comfortable. So. Yeah, no, I can completely see it and understand it. There's obviously a lot of high net worth clients that have, entire teams managing their TradFi portfolio, and because they're very time poor and they don't exactly, even if they are smart and savvy, they simply don't have the time. So it makes sense to have a team supporting you through this process, especially with something as new as and crazy as Bitcoin. Yeah. I just want to check if I've missed any questions, Peter. I think we have really covered a lot of ground. I've covered all the questions that I had.
Awesome.
Is there anything that you would like to share?
I think probably the most important message is Bitcoin is now gaining, I guess, mainstream notoriety. A lot of people feel like they have missed it, and so they don't want to touch it. And a message to reiterate that I think is really important is we're not even in the second innings yet of Bitcoin. The party has not even started yet. There's so much capital come to this space. Maybe 10 million people globally actually deeply understand Bitcoin. There's another 8 billion people who need Bitcoin. Not want it, they need it. And so we're still so early. There's so much upside in front of us. And my, I guess, passing message would be take action if you haven't already. Fill your boots, learn as much as you can, and your life will be better off for it.
Yeah, absolutely. Which is another quote that I was just reminded of that you said in another podcast, is that Bitcoin rewards, I'm going to mess this up now. It rewards it's not the big versus the small, it's the fast versus the slow, or something like that. You said true. It much better.
It used to be the big eat the small. Now it's the fast eat the slow. So
yeah, that's it. Yeah. That's it. I was like, I got there in the end. Yeah. Well, thank you so much for your time, Peter. If someone wants to reach out to you or Andy, what would be the best way to get in contact?
Best way to reach out to us is probably on X. It's Peter BTC Advisor with an ER is the fastest way to get in contact with me, or alternatively go to the website thebitcoinadvisor.com, and that's advisor with an ER. You'll see both Andy and our faces there, along with a whole host of some of Bitcoiners' best. I think we've got the best Bitcoin team in Bitcoin. Literally just a wealth of knowledge there who can help you with just about any Bitcoin question that you've got. And I know we're all mission driven to help you safely custody your Bitcoin and help you get more Bitcoin. So if there are any questions around that, really welcome the opportunity to help in any way, shape or form.
Awesome. Thank you so much. Thank you for your time.
Anja, thank you so much. Appreciate all you do.
Thanks.
That's it for this week on The Honest Money Show. Big thanks to Bitteroo. Check out why more Aussies are choosing them at bitteroo.com.au. And shout out to our listeners on Fountain, where you can earn sats just by tuning in. If you appreciate the way we cut through the noise, you can support us directly via the QR code in the episode notes. Until next week, take care of yourself and your money.